Welcome back. This presentation is called Structuring for Success, Choosing the Right Business Entity. The first entity we'll talk about is sole proprietorship. The definition is one person owns and runs the entire business. In regards to liability, the owner is personally liable for all debts and obligations. In regards to taxes, profits are reported on the owner's personal tax return. The pros are it's very easy to set up, the owner has full control, and it's low cost. The cons are there's unlimited personal liability and it's harder to raise funds. So essentially, the sole proprietorship option is the easiest to start, but it has the least protection for your business, and there's very little separation between your business and your personal assets, which can be very dangerous. The next entity we're going to talk about is called a partnership. The definition is where two or more people share ownership of a business. There are a few different variations of a partnership, including a general partnership, where all partners share liability and management. There's a limited partnership, where one general partner has all the liability, and there are one or more limited partners, also known as investors. There's the limited liability partnership as well, where partners have liability protection in many cases. For the partnership entity, when it comes to taxes, income passes through to partners' personal tax returns. The pros are it's easy to form, there are shared responsibilities, and there are pooled resources. The cons are there is potential for conflicts, there's liability risks, and it depends on the structure. Next is the most common entity, which is limited liability company, also known as LLC for short. The definition is this combines a liability protection of a corporation with the tax flexibility of a partnership or sole proprietorship. When it comes to liability, owners, also called members, are generally not personally liable. With taxes, they can be taxed as a sole proprietorship, a partnership, or a corporation, so there's some flexibility with taxes. The pros of an LLC are there are liability protection, flexible taxation, less paperwork than a corporation. And some of the cons are some states have higher fees and there are varying rules. The next entity is a corporation, also known as a C Corp. The definition is it's a separate legal entity owned by shareholders. In regards to liability, the owners and shareholders have limited liability. With taxes, they are subject to corporate tax, and the profits may be double taxed when distributed as dividends. The pros are there's strong liability protection, and it's easier to raise capital, and there's perpetual existence. The cons are it's more complex to set up, there's more regulations, and there's double taxation. S Corp, or S Corporation. The definition is it's a special tax status that allows a corporation to avoid double taxation. Liability. It has the same liability as a corporation for limited liability. Taxes. Profits and losses pass through to shareholders' personal tax returns. The pros are it avoids double taxation and there's liability protection. The cons are there's strict rules and there's limits on number and types of shareholders. And in conclusion, choosing the right legal structure is one of the most important early decisions when starting your business. Each structure affects taxes, liability, and how you can raise money. Guys, I can't stress this enough. The key one here is liability. You want the structure that's going to give you the most liability and protection because you want to keep your business separated from your personal assets. If something bad happens, let's say you get in a bad accident at work, you get sued by an employee, you get sued by a client, and something like devastating happens to the business, you want your business to be like completely separate from personal, okay? And we'll talk about this a little bit more in other videos, but the last thing you want to do is lose your house or lose some of your personal money or all of it because of something that happened on the business side, okay? So at the end of the day, most home services Most home service businesses choose an LLC for their business, but you can choose whatever you want. So don't take my advice. Talk to an accountant or a tax professional when choosing the right entity for your business. Thanks for watching, and we'll see you on the next one.